me see if I can move the slides. See if the slides are not moving. See, the slides are not moving. Administration made simple. And I'm also going to go over the new overtime rules that you're going to have to be faced with implementation probably sometimes in early 2019. So let's get right into the presentation. You see some things about me. You can read that later on. That's not that important. What's important is what the information that we can impart to you, and you walk away from this presentation with a great knowledge about payroll rules and made simple, as well as the new overtime rules. What is payroll? Payroll has only one key you have to obtain. That's what? Perfection. Everybody expects you to pay them correctly. Nothing else is acceptable. And those of you who are in payroll know that to be exactly the case. No one expects you to do anything but pay them correctly day after day, pay period after pay period. So the essence of payroll administration is perfection. Perfection on one hand and prevention. Perfection meaning you pay everyone correctly, and prevention is that you comply with the law, know the law and comply with the law so that your company does not get into any type of difficulty with the authorities because of noncompliance with payroll laws. So you got to know the law, comply with the law, make certain everything is perfect, as well as prevent your companies from suffering lots of fines and penalties. And I've been in situations where my company did suffer fines and penalties because we did not comply with the law. So your primary goal is what? Perfection. It means prompt and perfect payment to your employees. Once again, being redundant, but I want to make this point. Know the law, comply with the law. So your primary job is what? Get your company's attention, share information, and ensure compliance. Now, what happens when you try to get their attention? Do they listen? No. In most cases, they don't listen, and they leave you kind of out there on an island by yourself. And when something happens, they point to the payroll folks and say, they did it, we knew nothing about it. So you have to be very aggressive in your understanding of the law, knowing the law, and complying with the law, and sharing information, and make certain that everyone else knows what's taking place so that they can also comply with it as well. Because trust me, if you don't do that from an aggressive posture, when something happens, they will point directly at you and say, well, the payroll folks did it, I had nothing to do with it. I think some of you can feel my my pain on that. I've been around this payroll game a long time, and it certainly hasn't changed. So what you want to do? Perfection on one hand, prevention on the other hand. You want to avoid huge fines and avoid penalties. If you don't do this stuff right from the standpoint of the Department of Labor and all the other federal and state authorities, they do what? They levy fines and they levy penalties. So what happens in lots of cases, because you refuse to do something that would have cost your company a minimal or a small amount of money, but it is not in compliance with the law, then someone comes in and they give you a huge fine and a huge penalty. You're much better off doing the small amount, comply with the law to avoid these huge fines and penalties. When I talk about a proper payroll path, this is where we're going. We're going to, first of all, determine if all workers are either contractors or employees. Then, once we get to the employees, we have to separate them into exempt or non-exempt. Those are the only two classifications of employees. So I'm going to have contractors and then employees. Employees are going to be either exempt or non-exempt. And then when we get to the exempt or non-exempt, then we're going to apply the rules of payments of wages and overtime. Who gets overtime? Non-exempt. Exempts do not get overtime. And then the other dimension we have to concern ourselves with is the proper maintenance of records and the required submissions to both the federal and state authorities on both our contractors and our employees. So that's kind of the path of all payroll functions and all payroll activities. I'm also going to cover too the new FSLA overtime rules, which require all companies to review workers versus contractors. You can get really in trouble if you classify somebody as a contractor and they are really a worker and should be either exempt or non-exempt. And there are going to be some new rules on the salary thresholds for exempt and non-exempt classifications, and it's probably going to result in many of our folks now that are exempt will fall into the non-exempt category and will be eligible for overtime. And then that's going to mean you have to do a whole lot of other things differently and more expansively for the payment of overtime. And that also is going to mean lots of record keeping and administration in all of these areas. So I'm going to try to give you a heads up to what's going to take place with the new law, so you can prepare yourself with it. This law was supposed to have come in 2017, I believe it was, and it got delayed for political reasons. They're now talking about it in 2018. It probably will not come into effect until 2019, but we shall see. I'm going to cover these things in the webinar. Segment 1, we're going to talk about worker classifications, contractors versus employees. And once we get to the employees, we're going to talk about who is classified as an exempt. Now, why don't I have something up here about the non-exempt? Mainly because there are no criteria for non-exempt employees. There are 5 categories of exempts. And if a person does not fit comfortably in one of the exempt categories, then by default, they become a non-exempt. So we look at the exempt categories, and then everyone else falls out if they don't fit those criteria. Everybody else falls out and are by default non-exempt. And then we're going to talk about the understanding and implementation of proposed overtime rules, what I just talked about, and then we're going to talk about the non-exempt classification and payment. Lots of rules that apply to the non-exempt classification, and especially the non-exempt payment. You got to pay them number one, for all hours worked, as well as for overtime. And I think we missed the boat in many of our companies on these non-exempt payments because we tend not to be that careful about the payment of our non-exempt employees, especially when it comes to compensating them for total hours worked. And we're going to discuss that because most of the issues we get into with the Labor Department has to do with the non-exempt employees. Workers' classification. Either a worker is either a independent contractor or an employee. So let's get into that. Independent contractors, we apply this test called the ABC contract test. That's a test that the Internal Revenue Service uses in order to determine if a person can qualify to be a contractor. Why is this so important? This is important because a contractor, we don't collect taxes. So if a person is improperly classified as a contractor and we're not collecting taxes, then that's something that's not very good for the Internal Revenue Service, and they get concerned about that. So this ABC rule is absence of control, meaning what? Our contractors are working independently. That's why we call them independent contractors, meaning we're not controlling them the same way that we do our employees. So that's absence of control. And secondly, in the B part, they're doing business that is unusual. We don't expect for contractors to be doing things that would normally be done by our line employees, our line supervisors. They are expected to do things that are unusual. And the third criterion is that they're customarily doing business as an independent contractor. So that's ABC, absence of control, business that is unusual, and C, customarily doing business as an independent contractor. And that's the test that the Internal Revenue Service provides. What do you have to be an independent contractor? Documentation is key. You can see on the screen here, you must have a contract or a PO. You need a W-9 form. You need invoices from your contractors. You're going to be providing them 1099s on payment. And you must have proof of other customers. Remember, the C says customarily doing business as an independent contractor. So you need client lists, business cards, and all these other things that are there so that you can see that they are customarily doing business for other customers. And next is proof of insurance. Very, very key. Because, why? If you are, let me back up and say this. What the government will look at is that if you treating your contractors in many respects the same way as you treat your employees. And here's one way. If you are providing for workers' compensation insurance or general liability insurance or any other kinds of insurance that you provide for your employees, if you provide that to the contractors, then someone is going to suggest you're treating them the same as employees, and that the classification as independent contractor would not be valid. And here's another little key: keep all the records in accounts payables. If you kept the records in payroll, then someone's going to assume you intended to pay the contractor the same way as you do your other employees in payroll. So keep those records in accounts payables. Now, those sound like very, very minimum kinds of issues, but I've seen companies get themselves dinged because they were not doing that. They were having the contractors take the same type of training in the same area that the employees were, submitting time on time cards like the employees, as well as keeping the records in payroll, and that was not good. So here's some red flags, we call it. I just mentioned a few of them. Paying employees performing extra duties on W-2 and 1099. This is always an issue. You got an employee that may be you got a person that may be an employee, but let's say they're cleaning up the building, or they're doing security or something, a lawn service, and you pay them on a W-2 and a 1099, and that's okay if you for the portion of work they're doing as a contractor. If you are having all of the same documentation in place as you would other contractors, that's okay. But the problem is this is a red flag. So when the Internal Revenue Service sees a W-2 and a 1099 on the same person, that's going to raise a red flag. So you got to make absolutely certain you have all of the documentation to back that up. And then what happens sometimes that you lay off employees and hire them back the same day or the day after as a contractor. They're doing the same thing, same job, same telephone, same email. Well, that's a red flag. Someone's going to pick that up and say, wait a minute, you're just trying to cover the fact you lay these people off, bring them back in, pay them with the 1099, and that's not going to work. Same thing with retired employees. You retire one day, they come back next day doing part-time work, sometimes in the same area. Now, these things can be done. They normally try to say wait 6 months before you bring them back in, and then have them doing things that are not business as usual and not doing things that they were doing before they retired. And you got to be careful about including, sometimes your contractors are including your command structure. That's not going to work. Okay? And most importantly, submitting your contractors to the same rules, duties, and orientations as your employees. That's not going to work. And not keeping records in AP. These are the red flags, so you got to make absolutely certain you're not waving a red flag in front of the Internal Revenue Service, because they will see it and they will come down upon you and give you this kind of stuff, fines and penalties. Unintentional, intentional, willful. I'm always asked, what's the difference between unintentional and intentional? The answer is this. It's the IRS agent that's looking at the case. If they think you were doing this intentionally versus unintentionally, you just didn't know the law and didn't comply with it, or if you knew the law and was complying with it, or if you were willful, you can see that the fines and penalties are much more severe. So you got to be real careful about that. This is the prevention part of it. Prevent your companies from incurring these fines and penalties because you're not complying with the law in terms of contractors and employees. So let's get into segment 2. Now that we've split our workers between contractors and employees, let's get into the employees. And we're going to talk about exempt classifications, because once again there are no definitional criteria for non-exempt. If a person does not fit comfortably in one of the exempt categories we're going to talk about, then by default they fall out to non-exempt. This all goes back to the Fair Labor Standards Act, 1938. That's where it all starts, and we're still operating under the rules that were established in 1938. Goals: keep people off the unemployment line, stop abuses of companies working their employees excessive hours with no overtime. That was the genesis, that was the origin of the Fair Labor Standards Act. That's what they were trying to accomplish back in 1938. Now, in 1938, the minimum wage was 25 cents an hour. So, the two categories of employees were established in the 1938 law, Fair Labor Standards Act: exempt and non-exempt. They created the exempt classification to protect the employers, meaning the employers could hire someone to do a job, give them a function, tell them what they wanted them to do, and pay them a salary, the same salary each month or each pay period, no matter the hours worked or the quality of work performed. You hire someone as a controller or a sales manager, you say, here's what I want you to do, here's your salary. It doesn't matter if you work 20 hours or 120 hours a week, you get the same salary. That was to protect the employers. On the same token, the non-exempt classification was there to protect the employees. Why? Because companies were work employees, excessive hours, no extra compensation. So, what they said if we require the companies to pay extra compensation, and that's overtime, for these employees that they're working excessive hours, then rather than do that, they would hire more employees, and then that would get people off the unemployment line. Exempt, protection of employers; non-exempt, protection of the employees. So here's what they say. Now, this always comes up. The Fair Labor Standards Act of 1938 only provides certain things. And so folks always ask me when I gave these seminars, well, what does the law say? The law says you can do it, or that you can pass the law yourself, or you can pass a provision yourself. Look on the left side of the screen. This is what the Fair Labor Standards Act calls for: exempt versus non-exempt, and accepts the minimum wage and overtime rates. You got to be paid 1.5 times your normal rate for overtime. It has restricted, excuse me, it restricts on child labor, and it has equal pay for equal work. It does not provide for the things you see on the right: sick vacation, personal time off, children over 16, and all of these other things we give the employees. Here's the rule: you can always give more, but you can't give less. So it becomes a policy of the company. So the company must have a company policy for all of these things you see on the right, because the law, all of the things you see on the left, says you can establish all of these things so long as they do not conflict with what the law says. So think of it this way: you can always give more, but you can't give less. So part of this whole thing about payroll administration is to make certain that we have policies in place. And that's where you come in as payroll professionals, et cetera, et cetera. And folks always say, well, what does the law say? The law doesn't say anything. The law doesn't tell me how many hours to give for vacation. That has to be done on the policy. We'll talk about some of those things as we go on. FSLA says you can grant greater benefits, but you can't less. So long as what is stated in the policy, you can't discriminate between classes of employees, which means what? You can't have your low-level employees getting substantially less benefits than your high-level employees. And they cannot violate federal law. And, of course, they must be consistent with state law. For example, if I have a federal law, which is overtime rate, if the state law has, let's say the federal law is $7.75, state is $15. I got to comply with the state. Okay? If you don't have a policy, then what happens? Your practice becomes your policy. Someone comes in, and we always frame all of this discussion in what would happen if we had to undergo a Department of Labor audit. Department of Labor comes in, and they will say, well, what is your policy? You would say, well, I don't have a policy. Then they would say, well, what is your practice? So then your policy, your practice rather becomes your policy. Would you be okay with that? Well, wouldn't. You've got to make sure you have written policies in place. Exempt employees, I say, unless someone can comfortably fit in one of these 5 categories, by default they become non-exempt. So what do we have? We have 5 categories. We have the executive, administrative, professional, computer employees, and outside sales. Those are the 5 categories of exempt employees. We only have 2 categories, exempt or non-exempt. These are the exempt categories, and they have specific criteria for each one, so let's take a look at those. Before I get there, what is the primary determining factor as to an employee's exempt status? It's the job description. And so I throw this little teaser in here to say that I got to have a job description that indicates all of the criteria for these categories so that they can stand the test of scrutiny when someone comes in and they say, is this person exempt or non-exempt? This person is exempt. Here is the job description. That person knows what their job is, and they are performing the task of that job in accordance with that job description. That's very key. And I can see some of you shaking heads now. Do you have up-to-date, current job descriptions? I'm going to talk about that a little bit later on. As a matter of fact, I'm going to talk about it right now. Can your job descriptions fill all of these criteria? Do you have them all for all of your positions? Are they current? Do they indicate whether that position is exempt or non-exempt? Does it cover all the primary duties, include the salary range? Has it been updated? Has it been acknowledged by the employee? And I'm going to go back. This other duties as assigned. Here's a red flag. We always just throw that in the job description, other duties assigned, to cover everything. Well, that's not what that is supposed to do. Other duties as assigned should be other duties as assigned consistent with the exempt duties defined in this classification. What are we trying to prevent? We're trying to prevent you from giving non-exempt employees exempt duties or exempt employees non-exempt duties and thinking that you have it all covered because you put in the job description other duties as assigned. That's a big red flag, and that's also a red flag for the employees. Why? Because your exempt employees are not getting overtime. So if you're going to have your exempt employees doing non-exempt duties to which they should be authorized overtime, and you say, well, I don't have to pay you overtime because it says other duties as assigned, you're just asking for trouble. Be real careful with that other duties as assigned. Should be other duties as assigned consistent with either the exempt or non-exempt duties outlined in this job description. Now, here's the current criteria for exempt positions, and this is what's going to change. And we'll talk about the change. What it is now, it says a person must make $455 per week or $23,660 per year. I think you have to realize that that's kind of low for exempt classification. But you got to be making that. That's the salary threshold that one has to meet in order to be classified as exempt. And or your compensation from all sources exceeds $100,000. You got to be performing office or non-manual work 50% or more of the time. And here's the thing I want you really to focus on. You must exercise discretion and independent judgment. So that's what we expect of exempt employees, that they exercise discretion and independent judgment. We can't create high thresholds, but there are cautions. But this is the real key. Are they making the salary threshold, and primarily are they doing exercise of discretion and independent judgment? Okay, so here we go. We got the exempt classification, no brainer. That's our CEOs, COOs, CFOs, all of those folks. The folks that can manage a company, manage a unit, hire, fire, promote, and obviously they manage what discretionary powers and independent judgment. Should be no issue about that. Administrative classification, same thing. These are your mid-level managers, purchasing agents, credit managers, HR managers, mid to low-level managers. They work for somebody, but they're managing a department. And they are also using what discretionary powers and independent judgment. I use kind of a real base example when I teach this class. I say the executive is the person that can buy the restaurant. These are the folks that develop the menu, and then the non-exempts cook the meals. They're cooking the meals based on some pre-described menus, but these persons are using discretionary powers. For example, the CEO says we want to put up a branch in Omaha, Nebraska, for example. They would then go to the HR and say, okay, if you're putting up that branch, then I need me what resources we need in that branch function. And so that HR manager, using their skills and their training, would develop what's needed in terms of resources in that branch. Then we get to the professional classifications. These are our doctors, attorneys, school teachers. These are the folks that have acquired their knowledge through a prolonged study, and they also use discretionary powers and independent judgment. The one area that I always get into a discussion with in terms of these live sessions are nurses. If you have nurses, are they exempt or non-exempt? I've seen both ways. Exempt in some cases, non-exempt in other cases. I always maintain that nurses should be exempt. Maybe the nurses' assistants are non-exempt. But I have seen nurses classified as exempt. I have seen them classified as non-exempt. I think because they've probably been 6 years, and of knowledge and a prolonged study, and then of course they can really step in for the doctor and use discretionary powers and independent judgment. So I've always figured that the best classification would be for them to be classified exempt, but many folks have them down as non-exempt. So that's if you have nurses, that's something you might want to just take a look at and see. And then these are the creative artistic classification, actors, actresses. They do creative work, and their results depends on primarily invention, imagination, and talent. Once again, exempt classification. Now, here's one where I think you have the greatest amount of difficulty, because everybody, it seems, who ever sits within 3 feet of a computer, thanks to a really high-level systems analyst and all that stuff, when they're really merely a computer operator or a help desk person. You got to be careful here, because your systems analysts, programmers, designers, and electronic engineers, those folks are probably exempt. And they're consulting with the users. They design, develop, document, test it. Now, you also have in this category lots of technicians. All they do is to cook the meals. They're doing things based on some defined set of procedures, some defined set of policies that someone gives them. You're like a help desk. You call a help desk nowadays, and what happens? You go through the rigmarole, tell them exactly what your problem is, and what do they say? Well, give me a moment to go consult with my resources. What are they doing? They're going looking in the book, and the book says, here's the issue, here's the solution. So once they can identify your issue as one that's visible to them in the book, then they go through all of the steps that's written in the book to tell you the resolution. Those folks probably should be non-exempt. So, outside salespeople, and here we're talking about the person that spends 80% or more of that time physically going to customers to solicit sales. Not someone sitting on a telephone trying to hound you into renewing your subscription or something. 80% of the time, these folks, they can be either salary or commission, but 80% of the time is spent out knocking on doors to get new sales. Okay? How do we pay these folks? Pay them the same salary, no matter the quantity of work or quality of work. You got to be real careful with overtime for exempt employees and this thing called compensatory time. A lot of folks have compensatory time, and that's a disaster waiting to happen. I've had compensatory time, and people are just coming to work unnecessarily to bank hours of compensatory time so they can get so much on it. And say, see you, bye, and come back in 3 months. And the other thing you can't do is to use payment as a form of discipline. The rules say for exempt employees, you pay them same salary no matter the quantity or quality of work. And a lot of folks, rather than taking discipline as defined in the human resources environment, will try to use salary. For example, I've heard cases where a high school principal and all of his teachers were exempt, would stand at the door, and then if you were 15 minutes late, try to dock your pay. You can't do that. You can't use discipline, can't use pay to mean out discipline. And again, this whole idea of requiring exempts to perform non-exempt work under the guise of it's other duties that's performed. Got to be real careful about these. Okay? Now, what do we say? We said anyone that does not fall comfortably in one of these categories, we have to do what? They default to non-exempt. So let's look at the non-exempts, which is going to include payment and overtime. And we're going to look at the new changes coming, because once you increase or change modify the salary level that one has to meet in order to become exempt, then that says a lot more folks are going to fall into the non-exempt category, and you're going to have to pay them overtime. Now the only folks we pay overtime to is non-exempt. The word exempt means exempt from overtime. So non-exempts are eligible for overtime. So here's what's going to happen, I think. And I say I think because the law has not been enacted, but here's what we've been talking about for the last 18 months to 2 years, that the law has been under consideration. Now, you got to make $450 per week or $23.6 per year. The new law is going to require $913 per week or $47.4 per year. Several states have already implemented this. New York is one of them, and I think New York, New Jersey, and a couple of the states have already implemented this. But you're going to have to make $913 per week or $47.46 in order to be classified exempt. Well, I think you can see if that's the criteria, a lot of folks who don't make $47.4 a year now and are classified exempt are going to do what? Fall into the non-exempt classification. And that's the real issue. You can also be non-exempt, or you can also be exempt now if you have total compensation over $100,000. That's going to increase to $134,000. And you got to, same thing, you got to perform office or non-manual work 50% or more of the time. And that same little item is there. You must exercise discretion and independent judgment. That's going to be changed, but the biggest exposure is going to be in the salary. Everybody 47.4 or less is going to end up being non-exempt, and many of the folks who are exempt now are making 44.7 or less. That's the real issue. So what's that going to mean? That means more employees are going to be non-exempt and subject to overtime. That's going to be a financial impact to the company. as well as what an administrative impact for accounting for and paying overtime to these employees. Increased time in record keeping, and it's also going to require you to do what? Look very carefully at your job descriptions. Get all this stuff, your job descriptions, your handbooks, and your policies and procedures. And you got to look at those jobs that what I call in the gray area. Now, what am I saying here? I'm saying when this law comes into shape, when this law is enacted, you're going to have some people that are clearly exempt, some people that are clearly non-exempt, and then you're going to have some folks that are kind of on the borderline or right in between. What do you do? It's going to be based upon the job description, and you know, is this person's job description such that they can be exempt or non-exempt? You got to be real careful about that. That's going to require you to go back and look at all of those jobs within that gray area, and maybe reassign or redefine the job descriptions, and probably classify these folks as either exempt or non-exempt. It's going to be real. And what's going to be the issue? A lot of folks don't want to be non-exempt. They think exempt has some type of highfalutin name to it. I'm exempt. I'm salaried. So you're going to have to deal with that as well. More employees are going to end up being non-exempt under this new rule and subject to overtime. You got non-exempts who remain. You got some folks who are non-exempts who don't want to be exempt because they make more money as non-exempt. They're working salary plus overtime, and then what category are you going to put them in as exempt? And is that going to mean less money than they're making now as non-exempt with overtime? And some exempts are going to want to remain exempt because they think they don't like being called non-exempt for some strange reason. So you're going to have that's a cultural issue you're going to have to deal with in your companies. Okay? Converting exempts to non-exempt, and what are the cultural implications of that? So if you're not thinking about these things, you need to start to prepare for them, because it's going to be coming, and you're going to have to deal with all of these issues. It goes back to your job descriptions, your handbook, and your policies and procedures, and of course your education of your employees, and to help them understand that these are the laws, and you got to comply with the laws. And some folks won't be an issue; they're going to be clearly exempt, clearly non-exempt. But there's going to be some folks in the gray area that might call you not only some financial issues based on overtime, salary, but also some cultural issues, because you got exempts who don't want to be non-exempts. You can have some non-exempts who don't necessarily want to be exempts either. So you have to deal with all of that. And it's going to mean all of these things. Lots of employee training. Excuse me. Lots of employee training. You're going to have to do lots of record keeping, and I don't know how you maintain your records of timekeeping, but you might want to look at some technology, time clocks, swipe security systems, all those kinds of things in order to do your record keeping in a much more efficient manner. And you're going to have to do this: job description, handbooks, policies, and procedures. That's going to be a Herculean task, to go through and make sure that all of your job descriptions are current. People that are in the job descriptions. What happens in the job description? A guy comes in, you give him a job description. Next thing you know, 3 years later, he's doing something completely different. Now, with this new law coming in, you're going to have to go back and make absolutely certain that that job description is valid. The person knows what the job description is, what they're doing, and all that stuff, and it really pertains to the current job that they're doing. How do you communicate this stuff to your employees? Handbooks got to be current. We got these intranets where we put these things out on a company internet. We require people to go periodically and read them, and all of your policies and procedures. So this is a big communications effort you're going to have to go through in order to make this thing happen. And I mentioned those folks in the gray area and all of your cultural implications. You're going to have non-exempts who prefer to remain non-exempt because of the compensation, although now with the new compensation rules, they may need to be classified as exempt. And then there are some exempts who disdain the non-exempt classification because they think those are the lower level people who are company, and we're the high muck of the mucks up here. We're exempt. I'm salaried. So you're going to have to deal with those, and some of those will be clear distinctions, but then there's going to be those that on the borderline. You're going to have to deal with those too. So I'm not trying to frighten you. I'm just trying to tell you these are all of the things you're going to have to deal with, and this is the impact. You're going to have increased payroll costs. You're going to have increased administrative costs. Your criteria for classification is going to have to be very clear. Everybody understands this, and you might as well get ready for labor suits and penalties because folks always do that. Now, let me just say something about that. When employees are dissatisfied about anything, where do they go? They go to the Department of Labor. The Department of Labor is the friend of the employee, not the employer. When an employee goes to the Department of Labor, the Department of Labor assumes that the employee is correct and the employer is incorrect. So they always defer to the side of the employee. Might as well just face that and be prepared to deal with it. So that's what you're going to be faced with, more so when this new law comes in. Timetable, I said sometime in 2018. It's probably going to be 2019. And the law did say, or the proposed law, I should say, did say that those thresholds are going to be adjusted every 3 years. That's part of the problem. The thresholds we have now haven't been adjusted for ages. And so these things are going to have to be adjusted every 3 years. So that's just kind of a heads up on what's going to happen so that you can start to think about those things, make certain job descriptions, handbooks, policies, and procedures are all accurate and in place because you're going to have to go through all of this stuff that comes out based upon what the specific provisions of the law are going to be. Okay? Now let's get into segment 4. And let's talk about the non-exempt classification of payments. Once again, can't qualify for exempt, you defer in a non-exempt. And we're going to talk about how we pay out non-exempt and our overtime. And most of the issues we get in terms of what happens with the labor board or lawsuits have to do with non-exempt employees. Most of them. Except, I should say that because I know of a lady who was a controller and she was working 80, 100 hours a week, and she went to the labor board and sued her. She was exempt, controller. She went to the labor board and sued her employee for payment of overtime. I think when he stopped laughing, she got the message. I call this the other side of the coin. Employees not meeting exempt criteria must be classified as non-exempt, and they must be paid at least the minimum wage, fed or state. If the state is higher, it must be paid. You must always give them the greater benefit. If the state is higher, you must give them the state. Now, I pause to say this because what? Almost 20 to 25 states are increasing their minimum wage. And I think the one that's leading the charge is the state of Washington, which I think they're putting the minimum wage up to about $15 an hour. So whichever is the highest, you got to give that to the employee. The Fed minimum wage, I think, is $7.75, but states are normally higher, and you got to do that from the state. Okay. Employees not qualifying for exempt, come non-exempt. Now, the second frame here is where we're going to talk about non-exempt. You pay them for all hours worked, and I do mean all. And if they work more than 40 hours in a week, you got to pay them 1.5 times. And their overtime that we pay them, that 0.5 or 1.5 times, must be based on total compensation. That's kind of the parameters of this payment of non-exempt employees. Here's what the FLSA states. Non-exempt employees must be compensated for all hours worked. All. Not some, all. Under the control and for the benefit of the employer. And the basic hours for determining wages is a work week. So they get paid for all hours worked when they're under your control or doing something for your benefit. And we do that. The basic is the work week. What does that mean? Establishing all hours worked. If we suffer or permit it to happen, you have to pay. And I'm telling you this, don't skimp on the non-exempts. And don't use disciplinary problems. Don't try to solve them with pay problems. Let me give you some examples of what I'm talking about. If you permit something to happen, you have to pay for it. If your employees are to clock in at 8 o'clock in the morning, they come in at 7 o'clock, clock in and go to the snack bar and have breakfast and go to work at 8 o'clock. If you permit that to happen, you've got to pay them for that hour. If you let it happen, you have to pay for it. And I've seen people who say, well, I didn't authorize that. I didn't authorize that overtime. Scratch it off the time card. You can't do that. If it happened, if you allow it to happen, you have to pay for it. And I always tell folks, don't skimp on the non-exempts, because I've seen many, many cases where someone failed to pay a non-exempt employee $40, $50, $60 that they worked some time and they told them not to work the time or whatever. And then that person went to the labor board and the company got a great big old fine when $30 or $40 would have solved the issue. So I say don't skimp on the non-exempts. And don't try to discipline them with pay. Discipline is one thing, pay is another. So here are the concerns. Lunch at the desk. If you're working at your desk or taking lunch at your desk, that's determined to be compensable time, because if you answer the telephone or email or someone comes by and asks you, or the rule says if you're having lunch at your desk, you're deemed to be working during lunch. Well, you say, well, I don't have any place for them to go. And I've seen that thing many times. The guy said, well, I don't have any place for them to go, so allow them to eat at that desk, but I pay them for it. If they're doing the cell phone or email, regardless of when it is, after hours, before hours, that's deemed to be compensable time. Always get pushback on this volunteer. Well, if they volunteered for it, did they really? Did they volunteer for it, or did they think they wanted you to do it? Remember, it says you got to be, if they're doing something under your control for your benefit, it may be deemed to be compensable time. Now, they may volunteer, but now if that person thinks they didn't volunteer because, and they get disgruntled, and all of these things always come up from disgruntled employees. They're going to go to the labor board and swear they didn't volunteer, and the labor board is going to side with them. And we have these issues of clocking in before the beginning of work. If you permit that to happen, you got to pay for it. Travel and training, when a person is deemed to drive 50 miles to work, you have them going to training and it's 120 some odd miles, you should pay them the difference. And what they would normally do from going back and forth to work and going to the training. I had a young lady in one of my training sessions in, I think, Augusta, Georgia, someplace, and she was just, when we were talking about this portion of it, she couldn't believe that she should have been paid for being in that training session. Her folks told her she had to drive not only 120 miles to get to the session, but she had to take vacation time. That's just an accident waiting to happen. She's going to go to labor board, and everything you do is going to come under scrutiny. You want to keep the labor board out of your companies, out of your business, because they're not your friend. They are the friend of the employee. Here's something that's on-call. How do you treat on-call? Here's how on-call should be treated. You should pay them a stipend for being on call. And then when you call them in to do something, from the time you call them in, then they go on the clock. You can't exchange overtime for time off. And you got to make certain that you're paying overtime based upon the federal guidelines or the state guidelines. What I mean, California has overtime that says any hours worked in excess of 8 in any given day is overtime. Federal law says over 40. But let me double back on the call for a moment. If you unduly restrict the activities of the person on call, meaning they've got to sit there and wait for you to call and can't do anything else, then that's going to be deemed to be compensable time. Be concerned about your exempt and non-exempt classifications, and once again, don't skimp on the non-exempts, because that's where most of your issues come from. And when you do these things, you always get yourself in lots and lots of trouble when you could have prevented that by a few $100s and end up paying a few $1,000s in fines because you took some disciplinary issues with your exempts that were actually pay matters. Take a look at overtime. Exempts get overtime. The fact that, non-exempts get overtime. The exempt classification says exempt from overtime. Overtime says what? Paid only to non-exempts, and it's time actually worked in excess of 40 hours in any 1 week, or if you're in a state that requires overtime in excess of 8 hours a day, California being one of them, Arizona, I think Nevada, state of Washington, and many other companies are adopting that policy as well. Nissan has adopted that policy because they have folks all over the United States that don't want them being paid on different levels of overtime. So some folks get overtime in excess of 8 hours in one given day, but the federal law is excess of 40 hours. And it's time, and folks say it's all time and a half. It's really time plus half. That may just be on word. And it must be regular rate of overtime must include all compensation. This is a hot button issue, and I'm going to talk about that in a couple of minutes, because folks are getting really dinged for not paying their employees overtime based on total compensation. Now, here we go. Split rate. Someone works at, these are just examples, 22 hours at $18 and 22 hours at $14. What do? They obviously have what? 4 hours of overtime, right? So we're going to pay them what? $704 total compensation. Divide that by the 44 hours, and that's 16. So I'm going to pay them those 16 hours another half time because they've already been paid the time. All I got to do is pay them the half time. So that total compensation is $736. Now here's the one where there's a bonus involved. Here's what you got to really pay good attention to, because this is the hot button issue in compensation now, especially as regards to overtime. There are two types of bonuses: non-discretionary bonus and discretionary bonus. A non-discretionary bonus is something the employee earns. Attendance, commission, on-call pay, callback pay, whatever. The employee has to do something in order to earn a non-discretionary bonus, as opposed to this discretionary bonus where the company decides to do something. Holiday pay, sick pay, year-end bonus, referral bonus, whatever. Those are just discretionary. They may do them and they may not do them. And that's a decision made by the company, as opposed to the non-discretionary bonus where the employee actually does something to earn the bonus. It is that non-discretionary bonus that we got to be real careful about in the payment of overtime. And here's what I mean. The employee is going to work 40 hours, $16 an hour, and they're going to earn a flat bonus of $50, but it took them 2 hours to earn that flat bonus. So what do we pay the person? We pay them $640, 40 times 16. We pay them this non-discretionary bonus of $50. We pay them a total compensation of $690, and it's taking them 2 hours in order to earn that bonus. So I'm going to take the $690, divide that by the 42 of hours, and I get $1,643. So what's going to be the total compensation for this person? The $640 for the 40 hours, the flat rate bonus of $50, and then the 2 hours of premium, which is $1,643. Total compensation $706.43. That's when you got to be real careful about. And here's another one. Excuse me. You got 42 hours, $10. Person gets a commission. So what are you going to do? 42 hours, $504, including the commission, $12 an hour. So you get 42 times 10, plus commissions, plus the overtime at 12. Total compensation $516. The point of these last two slides is this: if you're paying a non-discretionary bonus, you have to include that discretionary bonus in the hourly rate with which you compute overtime. That's a real hot button issue. And of all of the items I've heard recently that the Labor Department was really concerned about, it's this discretionary or non-discretionary bonus thing. And I've had companies that got fined up to $25,000 for not doing this. You say, well, sometimes we don't know what it is until after the end of the quarter. Well, they say you do one or two things. They say you either accrue it going through at the payment in anticipation of what it's going to be, or at the end of the quarter when the bonus is actually paid, you must go back and recalculate those hours that were worked during that quarter in order to achieve that discretionary bonus, that non-discretionary bonus, rather, so that you could pay that person the overtime using all compensation, using total compensation. Be careful about this, folks. This is a real hot button issue, and all of the folks I've talked to or heard from in this category, all of them got dinged and some fairly substantial fines from the Department of Labor because they were not including or they were not basing the overtime compensation of the non-exempts on total compensation. Things like performance bonuses, things like on-call pay, all of those things must be factors in the calculation of their overtime. And I just mentioned this hot button issue. You got to either accrue it going forward, or if you pay it later, go back and adjust and pay retroactive to the amount final. And if you get an audit, which is what a lot of companies did, they had to go back for 3 years. You want to go back for 3 years and recalculate overtime for all of your non-exempt employees that might have gotten a non-discretionary bonus? Don't think so. So you want to make certain you do that stuff correctly and make certain you keep it correctly and pay them for total compensation and prevent these penalties for noncompliance. So here we are. We're almost time for Q&A. Hope you got a lot of questions. Here's what we've talked about. Segment 1, we're going to identify workers in the two categories: contractors and employees. Contractors, you got the ABC criteria. We got the employees, got to be either exempt or non-exempt. There are no classifications for non-exempt or no criteria for non-exempt. If a person, there are 5 classifications of exempt. If a person can't fit in one of those categories, then they, by default, fall to the non-exempt category. We have, how do we pay them? We pay exempt employees a salary, the same salary each period, without regard to overtime. We don't pay them overtime without regard to quality of work or quantity of work. Now, I've had folks tell me, say, well, my exempt employees, after 40 hours, they go home. Well, that's not what you're supposed to do. That's a discipline problem. That's not a pay problem. If I'm getting paid for 40 hours, well, after 40 hours, I'm going home. You exempt classification, you pay them for a salary, the same salary, regardless of the quantity or quality of their work. And then, of course, we talked about the overtime rules, new policies, exempt, non-exempt classifications. Just keep in mind, what do we say? They get paid for all hours worked. And if they have those non-discretionary bonuses, that must be considered a part of their total compensation upon which we use to calculate the hourly rate that at which we pay overtime. And I think that's it, folks. We talked about the primary goal was perfection. There's no people, and I've been doing payroll a long, long time, and you can pay people correctly for 10 years. They never say thank you. The one time you don't pay them correctly, then that's where they start to wonder how you got on this earth in the first place. But that's the nature of what you do in payroll. There are no second places. It's got to be perfect all the time. And in order to do that, you got to be prompt. You got to be perfect. It means you got to know the law and comply with the law. And secondarily, you want to prevent these huge fines and penalties. I've gotten two just anecdotal references. We got a substantial fine once because we allowed some contractors to work who did not meet that criteria as contractors. As a matter of fact, we laid them off one day. They came back to work the next day and did the same thing. And the guy gave us an unintentional fine. And because he said we knew better, we were just stupid. And we were in the computerized income tax return business, and yes, we did know better. But he could have very well have given us intentional. That's why I said it all depends on the agent itself. But we paid a substantial fine for that. Paid a substantial fine and had to go back for 3 years and recalculate time cards in California because when the law came out, we were not paying. The law came out and said overtime is paid for any hours worked in excess of 8 in any given day, and we didn't do that. So we had to go back for about 5,000 employees paid on a weekly basis and recalculate time cards for 3 years. There's 2 teaching points here. Maintaining the records, which we did, and number 1, making certain you are proactive as opposed to reactive. Had we knew the law and complied with the law, when the law was enacted, we would not have had to go back. So it cost us, that whole thing cost us probably $500,000 in terms of back payment of overtime. Plus the fact we had to hire the 4 or 5 people for about a year, a little more, to go back and recalculate all those time cards. Can you imagine that? Sat in a room for a year, do a number of recalculating time cards and make certain we complied with the hour, the overtime, 8 hours of overtime, in excess of 8 hours in any given day as opposed to 40 hours in a week. But that's what happens when you don't know the law and don't comply with the law. And that's the whole essence, perfection and prevention. Know the law, comply with the law. Time for questions, folks. What do you have?